Welcome to Future of Fortunes, where we uncover how digital assets, NFTs, DAOs, and Web3 will forever change the financial landscape. This podcast is all about the future of making money, how tech has changed the game, and how real people can build real financial fortunes by staying in the know. Let's dive in.
Hey, good morning, good evening, good afternoon, wherever you're listening to us from in the world. This is Jake Claver with Byron Wolf on the Future of Fortunes podcast. How are you, Byron?
Good, man. Loving this this nice, sunny, warm weather here in AZ. We got overblown with some windstorms last couple of days. I'm not used to that. I like the good, solid weather all the time. Like that's the whole point of living in Arizona. So it's back to beautiful. It's sunny. We're gonna go outside, get a little sun today. So hey, man, anytime you can do that in April, that's a win for me. But yeah, man, happy to get into it today. We haven't had a lot of crazy crypto news lately. And so I love Jake brought up a great topic right before we hopped on. I think people are going to really love this. We're going to talk about crypto versus gold. Well, specifically Bitcoin versus gold. We're going to talk about Bitcoin halving, why that matters to you, what that means, why it changes the price of it, and which is better for holding value. Which one do we want to park our money in? Do we invest in gold or do we invest in Bitcoin? So great topics. We're going to get a little basic. So if you're high level crypto understanding, I think this is still going to be good for you. If you don't know a whole lot about it, I think like strap in. This is going to be good. I think everybody's going to get what we're going to talk about today. We're going to go a little basic on this. And so hopefully we will be able to reach more people with this information. But yeah, man, let's get into it.
Yeah, I think just with the recent bank failures and everything that happened there, and we saw a pump in Bitcoin's price as a reaction to that, or could or could not be, but it happened, right? And so I think people are looking for places to park their money that they know is going to be safe, that it's going to be a store of value long term. And there's always been this debate between which is better, Bitcoin or gold. You've got Bitcoin, which is scarce. There's only ever going to be 21 million Bitcoin. It's programmed into the algorithm and the way it's mined. And so because of that, it's got value. If people say it has value and they want to park their money there, and it'll hold the value against whatever inflation is. Obviously, as inflation's gone up, we haven't seen it hold up as well as a lot of people were hoping. So we can debate that, but yeah, just wanted to touch on the topic and see, kind of educate people around the Bitcoin halving and what happens there. When we looked it up prior to this, it's expected to happen about a year from now. I think April 20th, 23rd, somewhere around there in 2024, we'll see another halving. And that just means that the rewards that the miners receive for verifying the transactions on the network and whoever solves the big, long math problem at the end of each one of those blocks, they get distributed rewards. And that means that the amount of rewards that they will receive will be cut in half. So I guess people would probably want to know how much they're going to receive. So in the beginning, when Bitcoin first came out, it was 50 Bitcoin per block that you verified. And you could do that on your PC at the house. The math problems that were at the end of the algorithm for verifying the blocks and the hash were not that difficult. I mean, they still required computing power, but you got 50 Bitcoin. And then when the first halving came around, it dropped to 25. We've had one more since then, which, people now get 12.25 Bitcoin for each block that they verify. And then after this next one, it'll be 6.125 that you'll receive. And so you tend to see the bull runs happen after the halving. Do you kind of expect things to play out the same way they have in the past on this one, Byron?
Yeah, I do. I mean, this is a very common, sell on the news, buy on the rumor. It's not a rumor. This is going to happen. We're going to have, but like right now we're in that kind of build up to it. We know that it's going to happen. The prediction, like you said, April 23rd, that's a current prediction that's out there. I mean, there's a few other ones that, it's April, May timeframe. So when it does happen, that halving occurs, Like you were saying earlier, those miners are going to get half of what they were receiving earlier. And so I think that we will see people start to invest back in it. I was just checking the price. We're a little under 28K right now on that. So we saw a little bit of a jump, and then we saw a little bit of a pullback, and now we're kind of on a little bit more of an upswing, which is great. I do like to see, like that start to come up. So my prediction is we'll see it, continue to go up. There'll be some, bounces here and there. Like, when we talk about the difference between gold and Bitcoin, both are great holders of wealth. Bitcoin, because of the supply issue, so there's less than 10% of the supply. Like you just said, there's 21 million Bitcoin. There's 19 million that have been mined. So that leaves us 2 million, less than 10% left to be mined. So the supply is, it's only 21 mil. And so demand can only increase, right? Because there's only so many. So, when you can't change demand, then supply has to adjust. When you can't adjust supply, demand has to change. And so supply can't really change. So demand is going to go up based off of that. When that halving occurs, it's going to, that has to be worth twice that. Otherwise, nobody's going to do the work. If you came to work tomorrow and they said, hey, we need you to do twice the amount of work, you're going to want twice the pay. If they say, hey, we're going to cut your pay in half, then you're probably going to produce half of the work. So by that degree, that's kind of the same thing's going to happen with the halving. They're going to get paid half. So they're going to want to do either half the work, or the value has to be twice what it was before for that to make sense. And so I do believe that we're going to see an increase. I think we're going to see a little run on the Bitcoin. It'll go up. I think when the halving occurs, we'll have a little bit of an increase in the value, but I think most of the increase will have already occurred by then. Hence the, buy on the rumor, sell on the news. So I don't think we'll see a big sell-off. I don't think it'll happen like when it halves. I don't think we'll see that. I think we'll still see an increase. But I think majority of the price appreciation will be accounted for by the time, April, May turns around and we have the halving event.
Yeah, it'll have to. Well, so just your point there, it costs about $16,000 a month for these mining rigs to run. And so, well, per Bitcoin that they get. So you don't always, when you mine a transaction, you're not the first person to solve the hash a lot of the time. So you don't get the distribution. You're just verifying on the network. So it's whoever is first. And that's why they're continually adding, components to these supercomputers that are running on this, because whoever gets it first is who ends up getting the money. But as costs continue to increase to mine on the network, and the cost to keep up with the competition continues to increase, if you're not making more money by mining the Bitcoin, then you're not going to be able to continue to stay in business. So oftentimes we'll see the network become more centralized, and I'm not saying it's completely decentralized or centralized. That's a topic for a different debate, but it will become more centralized because the miners won't be able to afford to continue to keep mining if the price drops, right? So toward the halvings, that's happened in the past. You've seen a lot of people get out of the business of mining Bitcoin closer to the halving because the price comes down and it becomes more difficult to compete with the big boys that have all of the high computing power that are getting most of the distribution of Bitcoins. So by proxy, there's less and less miners on the network. As price increases, more and more people will come back to the network and start mining because there's a higher incentive to do so. So that's kind of the trend that's happened in the past. But yeah, if your expenses were increasing because power is going to cost more and computing power is going to cost more, and your profitability just got cut in half by the halving, it becomes, if it's not profitable, people aren't going to do it. And so in order to continue, the network, prices are going to have to increase. Otherwise, it's not going to be profitable, and the whole network will stop working. So that's kind of the justification that I've heard in the past from people that are big into Bitcoin, and why the trends have happened the way that they have. And I think that'll probably continue if the constraints remain the same around the supply, and a lot of the economic conditions remain the same, then we'll probably see a repeat of what's happened in the past. Now, if constraints were to change and economics conditions changed, then there may be something completely different that happens.
Yeah.
But so in comparison to gold, though, I don't know what gold's at today. It's back to almost $2,000 an ounce. If you look at that chart, it's if you look at the history and the other people that are saying, where gold's going to go, it's headed to around 3,000 over the next year. Bitcoin, again, there's a lot of people that would like to see the 100K mark. I know a lot of people bought in around the $60,000 mark when it was at the high and Coinbase IPO'd, and now people are down pretty substantially since then. So they would love to see it at least get back to there. And again, if the constraints remain the same, then we should see that, but it probably won't happen for at least another 2 years. I was around for the last Bitcoin halving for this last bull run. It happened in I want to say maybe it was April of 2020, April or May of 2020. And that was kind of the kickoff of the bull run for the crypto market last time. Bitcoin started to run first. And then after it kind of peaked out, that's when the altcoins ran. And that's generally how the cycle's repeated.
Yeah, May 11th, 2020 is when that happened. And so Bitcoin, I'm gonna look. Where we at?
It was like 3,000 or 4,000, very low in price back then.
Sitting around 9. It's about 9,000.
Okay.
Yeah, so I mean, we definitely saw, and that was right before, if you're looking at your chart, that was kind of right before, we saw that massive run up to I think it was like 64, 65. Then we had a little bit of a pullback, kind of a cup with a handle if you're a chart guy. We had a little bit of pullback. We went up, hit, like the under 70, but, in the high 60 range. Had a little bit of a sell off, a little bit of a spike, didn't quite make it back into the 60s, and then just kind of fell out. And so now we're in that kind of at that bottom of that slope. And so if you're a chart person and you look at these charts, history is definitely going to repeat itself. It does consistently in charts. If you know what to look for, you're going to see this it echoes, so it's not always going to be the exact same, but if it does something, based off of event, probably going to do something pretty similar based off of a similar event. And so the halving created this kind of, increase in price. I think it's going to respond a little faster this time than it did in the last halving and the halving before that. Just because, people have more information, Bitcoin's out there, more people are aware of it. It's not so much of a techie thing as it used to be. But still, I mean, not everybody understands what Bitcoin is, what it does, what its validity is, what its utility is. Like that's in contest. But people are aware that it's a word, at least. It comes up way more often than it does in 2020 or 2016. So because of that, I think we're going to see more action, leading up to the halving. And I'm not saying that it's not going to hit 100K, but I would say it's not unlikely that, that we don't see the 50, 60, possibly 70,000 range that we've seen before.
Well, and you got to think also, so these institutions are starting to step in here. You've got a Bitcoin ETF at this point. There's futures, the CME, and price is kind of correlated to that. If you watch the CME and how that trades, it'll liquidate shorts pretty often around that date, and so you can kind of anticipate when a big move is going to happen in the chart. But as they continue to develop financial instruments around Bitcoin, and there's fiduciaries that offer it to their clients, I think you're going to see some bigger money move into the space, and there's a potential for those higher valuations for Bitcoin. Again, that is stating that the constraints that currently exist continue to exist into the future. But and I like gold. I am an Austrian economist. I prefer that to modern monetary theory, even though, we've talked about the dystopian techie future that I've constructed in my mind a few before. But yeah, I think that'll always be money. It always has been money, and people will continue to hold it as a store of wealth. Some of the wealthiest families in the world have a lot of gold, and they back countries with it, right? They'll issue bonds against their gold. And so people talk about, you can't make money with your gold. It's not like there's any way to do that. You can issue bonds against it if you have enough of it.
Yeah.
And so maybe Bitcoin comes into something like that also, where people are able to issue bonds against it. And and you can generate income with it outside of just the appreciation on the asset. Uh, Again, there'll be a bunch of financial instruments that come out moving forward around cryptocurrencies and Bitcoin in particular. So I think both are good, and I think both have their place in a portfolio, especially if you're well diversified and you've got a pretty significant amount of wealth. For people that are scared of, just the general populace being scared of inflation and looking for a place to stick their money, I personally have an emergency fund in gold and silver. That's my emergency fund, and then anything above that, I would put that in cryptocurrency or stock market or other things. They were a bit more speculative until Bitcoin has a 10. So gold's market cap is 11 trillion globally. I think if Bitcoin were to establish itself as digital gold, it would have a similar market cap, and at that point, it would be in excess of 100,000 a piece, and probably a lot more stable than it is currently. So
Yeah, I agree. And gold, I also have gold and silver holdings, although I like, when I say holding, I mean physical, with Bitcoin, I have it, I own it, on a platform, but it's not something I can pull out of the safe and play, juggle or whatever. Whereas gold and silver, actually, I can pull those coins out, and have those in possession. I keep them in, in the bank, in the safe deposit box, or in the safe, or wherever, you want to put it under your mattress, feel free. I don't know that that's super safe, but I've seen people bury it, all kinds of things. But the physical possession of it is important to me for gold and silver. And I know that's contradictory to our crypto holdings, because our crypto exists basically on a ledger. They're a line item. But I do believe in those. We invest in those. Jake and I both believe in crypto, where it's going. Specifically, there's some that I believe in more than others, obviously, because there's a million cryptos out there. But like gold and silver, I don't believe in holding it outside of the actual physical holding. I know a lot of people get into the NFTs, and or EFT, sorry, and they own it on paper, and I don't, that's not a way to hold gold or silver to me. I'd rather have the actual possession of it. And again, that may be a little bit of dystopian, coming out of me, because if it all goes to crap, it's going to be, gold and bullets and band-aids. I mean, that's going to be. I'd rather actually have it in hand than count on somebody to hold my paper for that version. But I think with gold, it's a little bit more stable. If you look at your charts, gold is pretty consistently gone up. It's had some plateaus, some areas of limited tradability. But for the most part, it's a pretty stable thing. It's the backing of a ton of different governments and organizations, things of that nature. China and Russia have been buying up gold left and right for about the last year. They buy it up like crazy. Russia just came out with their own crypto that's going to be backed by their oil reserves, which, like it or not, probably a pretty smart move. I can't say I'm a huge fan of it as a U.S. citizen, but I recognize the intelligence in the movement. But all these things are going to be backed by something, and I think that when people say, "Well, is gold a better investment or is Bitcoin a better investment?" There's no straight answer for that. Like, if you're looking for stability, it's one thing. If you're looking for price appreciation, it's another. So,
yeah, so exactly what I was going to say. So as an investment, I would probably say Bitcoin is a better investment than gold. But as far as a store of wealth goes, I think gold's pretty well proven at this point that it's probably edged out Bitcoin, at least until the total market cap of that asset is similar to gold. Then it may be more stable, right? But yeah.
Easier to get a loan against gold, than Bitcoin. With staking kind of going away, it's going to be loans against these assets, digital assets. And so you go into the bank and you ask for a loan against your Bitcoin, it's much tougher. You go in with a gold bar and lay it on the table, they're going to bend over backwards to loan you money. So, if you're looking for that kind of the liquidity aspect, or, what you're going to hold to get some loans against, gold probably makes more sense. But if you're looking at holding something like you just said, that's going to appreciate in value, for an investment aspect, I agree. I like the Bitcoin, especially with a halving event coming up. I just don't really see a huge downside. I'm not telling you to go invest in it. We probably should do our disclaimer, but I'm not telling you to go invest in Bitcoin, but it probably has the best chance of that price appreciation. So if you're looking for something that's going to, you know, increase your holding or increase the value of your holdings, I agree with Jake. I think Bitcoin is the way to go. If you're just looking to hide your money under the mattress, go buy some gold bars or some gold coins or some gold teeth or whatever you can get your hands on, and I think that'd be a good one to hold on to.
Well,
Disclaimer.
there could be a revaluation of physical assets and a pegging of gold to oil and a few other things that could happen. I mean, if they really wanted to revalue gold to shore up the financial system, it would have to be north of $50,000 an ounce, which sounds crazy when it trades at 2,000 today. So I don't think that they'll, I think it'll be a multi-asset deal with if they were to revalue things, and it's not going to be just gold. But yeah, to your point, anything said here is for entertainment and educational purposes only. Please do not make any financial decisions based on this discussion. None of this is financial advice. Always speak with your financial advisor, CPA, or attorney before making any financial, tax, or legal decisions. So there's the disclaimer.
There it is. So I mean, I'm looking at the chart now. So the last time, we've had some, we've had it push against that $2,000 line a number of times. Last time we actually, jumped over it August 2020. But so we're above the 2,000 on gold right now, our gold futures, which is fantastic. I'm a big fan of that, and I do think that a $3,000 price point is not out of the question. I think that we've been on this plateau for a period of time at that $2,000 mark. That I think it's time to have a little bit of an increase, especially. People talk about, and again, you just alluded to this, the decentralization, like, are they independent? Are they linked? Like, not officially linked, but they do. Like, if you look at the crypto markets, they've tracked the market. If the market goes up, crypto generally goes up. If the market goes down, crypto generally goes down. If you can't buy eggs for something reasonable, you've got to find that money somewhere. And so when it becomes more expensive to live your life, people pull out of those assets that are holders of wealth, and those are going to go down. I mean, that's just the reality of it. So as I think Bitcoin goes up, I think gold's going to come up. It's not so much a question of is this better than this, or should I do this one or this one? I'm a big fan of like spread the risk. Maybe invest in some gold, maybe invest in some silver, invest in some Bitcoin. Ethereum has some cool stuff happening right now. Like, I think, Ethereum's on a bad shot. Jake and I are huge fans of XRP. Like, we definitely pretty heavily involved there. Like, look at the things that are out there, look at the options that you have available to you to put your, park your dollars and move in that arena. I think there's something to be said for personal investment versus like business investment. I talk to a lot of business owners that are, they're stacking cash right now, just kind of waiting to see what's going to happen. Interest rates, have gone up. We were just talking about the inflation rate right before we hopped on, and we're back down in the 6 range. We were a little bit above 7 there for a while. So to me, that's a great sign. I'd like to see our interest rates come down, since our inflation's gone down. I'd like to see those interest rates go down. The fact that they're not tells me that 6% inflation might be a little bit more,
CPI.
Yeah. Like I'll say media attention.
Well, we did touch on, we actually discussed bank accounts being back up at around 3 and 4% on some savings accounts right now, and CDs, some of them out there earning 5 and 6%. So that's nice to have a stable way to earn those types of yields. I know, people that have been around a little longer than me had the pleasure of having CDs and savings accounts that had some pretty decent interest rates back in the day, whereas the majority of my adult life, I've never seen anything like above 3% on a savings account. So you would prefer to have some stable way to, at least keep up with inflation, if not outpace it. And those have provided that in the past. And I think that's how you should look at this. If you're wanting to keep up with inflation, I think gold is a fantastic way to do that. It's not going to lose value over the long term. It'll always revert to the mean, even if it's traded and manipulated a little bit with futures and the paper contracts, like Byron talked about. But if you're looking for an investment that's going to, have outsized returns, just because the market is so much more nascent than gold, like gold's 11 trillion, like I said before, crypto as a whole is right at 1 trillion.
Yeah.
It's 1/11th of what gold is. So as it becomes more established, those that arbitrage and the potential gains in that market are going to go away. And I think we're right at the forefront of the adoption of digital assets. So as its own kind of mainstay asset class, Kevin O'Leary said it'll be the 12th sector of the S&P 500. So kind of in the second or third inning of a 9-inning game, and looking to see that mass adoption. And like I said, there's plenty of upside. So just depends on what your priority is with your wealth and why you're investing in something, which is going to be the best option.
Yeah, no, I agree. Yeah, you have to look at, what are you looking to do with it? What's your time frame, on that? Like if you could potentially need that money next month, then, gold's probably smarter. It's probably going to be pretty stable. If you don't necessarily need it for a period of time, then you are what I would say a little bit more risk tolerant. You can afford to deal with the ebb and flow in the market. So if Bitcoin has a little bit of an increase, a little bit of drop, and it has some movement, you can kind of watch that and make a decision based off of that. Gold is generally not had massive, price drops. Like, it's had some decent little like jumps up, but generally when it has those little, jump ups, it usually stabilizes. It doesn't generally have a big jump and then a big fall like, your Bitcoin. If you put those charts next to each other or over top of each other, they're very different. So it is the two items that are probably talked about the most for investment, or like not necessarily safe investment, but they come up a lot on what are you putting your money into. Obviously people don't want to put it in the banks right now with all the stuff that's happened in the news lately. But the reality of that is, those are still fairly safe. The government's come out and said, "Hey, we're gonna back these things. We're gonna make people whole." So I'm appreciative of that. Can't trust that entirely. If something really bad happens, that don't count on them to do that. I mean, I would argue that I don't even know that I would trust the 250. Like if you're counting on them to have that money as well to make that happen, and it may be like Argentina, where you got a wheelbarrow full of paper currency to go buy, 2 or 3 eggs, like, so it may give you your 250 back, but the value of it might be so low at that point, it's not worth the paper it's printed on. And pay attention to what the market's doing, pay attention to where it's at. If we have this massive jump, if Bitcoin went from, the 29 or, a little under 30 right now to 100, tomorrow, that massive increase would have ripples, that would probably destroy, I'd say, at least half of that appreciation, if not more. So look at the long term, look at what things are going to happen, long term wise, where they're going to go. Again, I love the concept of we're looking at market cap. There's so much gold out there, so an increase in the gold value isn't going to have as big of an impact as the same percentage increase that Bitcoin have. When you're talking a much smaller market cap, it's going to have a bigger impact on what's going on. And so, when you're looking at what is a dollar buy me, that's probably a bigger indicator of where you need to be. If your Bitcoin doubles in price, but the cost of all of your goods that you're purchasing triples, then you're not really ahead. I mean, that's not a good thing. So, pay attention to what you're investing in, do your research. Like we always say, do your research, invest in what you know, look at the utility. If you want to invest in Bitcoin just for the appreciation, then concentrate there and look at the indicators, maybe set some things to warn you if things occur that we know are going to have an effect on it. If you're just looking for a place to park some money, gold and silver are always good. They've been good for a long time. I don't see a whole lot of chance of that changing anytime soon. Just be smart with your money, and invest in yourself first, guys. Like, if you got some extra money and there's a way to invest in yourself or your business, I would say do that. That's going to be your best return. But if you're just looking to park it for a while, then hopefully this helped on the difference between gold and Bitcoin. And if it didn't, well, then you should probably listen to it again because this was good information.
Yeah, I thought it was good. Well, cool. I think we're going to go ahead and wrap it up for this one. Really appreciate everybody that's joined us and is listening to these. If you haven't subscribed yet, please do so. And we will see you guys on the next one.
Thanks for joining us.
Thanks so much for tuning into this episode. We sure do appreciate it. If you haven't done so already, make sure you're subscribed to the show. This way you'll get updates as new episodes become available. And if you feel so inclined, please leave us a review. Until next time, friends.